Hello traders, in this video I would like to do weekly review of what played out in the markets this week. This morning, this Thursday, we're dealing with very corrective day. This morning S&P sitting at ultimate Fibonacci support. This ultimate Fibonacci support bright pink line keeps trader out of trouble and not allowing trader to short into. This is the most important Fibonacci level that's always present if trend is minor. If trend is major, S&P will go into free fall. The fact that S&P been sitting at this support since Asian session is very powerful reminder. If you know Fibonacci levels, if you play by proprietary Fibonacci rules you learn in the course, you can trade any time frame you will choose on S&P. This is your ultimate day trading trend chart. You want to trade 5 minutes, why not? This support been respected and in a play, keeping trader out of trouble since Asian session. What is the problem to the upside? To the upside, we're dealing with the most important rule you learn in the course: what not to enter into. This support is a major obstacle currently on Amazon this morning. Identical level, identical strategy, except this is your investment decisions. Amazon sitting very pretty at the end of the minor trend. Buyers on S&P currently stepping in just like on Amazon. Look at that. Since Asian session, 14 hours in a row, Fibonacci keeps day trader out of trouble. No matter what chart you trade. This week, trader who knows shorts on Amazon into this support, not an option, is also on the right side of the market. Trader who is trading Tesla long term knows extremely well where buyers coming from. This bright pink Fibonacci support, that's also ultimate resistance next on Tesla. Again, pay attention to hourly pivots to the upside. We're not getting basic strategies. Only on junky charts. So ladies and gentlemen, here's a trade on S&P. Stop 2652.75. We continue dealing with the end of the minor trend in front of you. Please pay attention. As you witness this entire morning, prices moving between ultimate support and ultimate resistance. Short into support were not an option. And let me remind you, as this trade moving up and will encounter massive obstacles at this bright pink line, which is exact same level on Tesla, what played out the entire week and why my bias remained firmly bullish, because S&P was at this reversal zone. Ultimate trend inception. Ultimate reminder what not to short into. What is the problem this morning and why are buyers so weak? We're very close to institutional resistance. That's a problem we're dealing with this morning. Bullish rally exhausted. But as entire week you witnessed on day trading charts, ultimate reminder what not to short into, that's exactly what played out. As you saw in previous video, we discussed since Monday morning, shorts not an option. We discussed yesterday that we expected price at this level. This is where price is now. And this is again Fibonacci support that's been present in front of you for days. All the levels in front of you always in advance, as price reminding you Fibonacci is the only natural predictive tool in the market. Ultimate correlation of the levels present in front of you for days in a play in front of you right now. On S&P, your day trading chart. Exact same formula as on Tesla this morning. Tesla 300 will be a problem. On S&P, this level remains major obstacle, as we're dealing with very weak buyers and ultimate brick walls, back and forth, back and forth. No matter what chart you trade, no matter what time frame you play, these Fibonacci levels remain exactly the same. The only difference, risk management and trader psychology. Buyers remain extremely weak. This Fibonacci resistance remains an obstacle. And that's the dance on S&P and Tesla this morning. And that's the dance on Amazon. Ultimate support on both with ultimate resistance next. On Apple, this is ultimate reminder. Apple been frozen at this resistance for months. Identical Fibonacci levels. Identical Fibonacci strategies. The importance of the minor trend never to be ignored. S&P in excruciating pain dancing between ultimate support and ultimate resistance entire morning. Just like Tesla, just like Facebook, just like Apple. What is the difference? You don't have to wait for days, weeks, months, and years to see the accuracy of the method that you can apply to your position and investment decisions. You see it in front of you every day in the trading room on S&P. So, if you know where Fibonacci levels are, you know extremely well what not to short into. If you respect the most important rule you learn in the course, you know extremely well what not to buy into. This level to the upside this morning is a massive obstacle. Will S&P finally blast through this resistance, or will it continue respecting just like Apple been doing since last year? What a market we're dealing with. But what a powerful reminder. My bias at this support remained firmly bullish. Key moment on S&P. This is a level that's holding the key in this market. 2660. Ultimate brick wall. Key moment on S&P. Exact same level where Tesla is heading to. From ultimate support to ultimate resistance. Do you want to trade Tesla? Why not? If that's appropriate to your risk management, your account size, your psychology, because day trading not your cup of tea, you use exact same strategies you learn in the course. That's all there is. Pure price for entry and Fibonacci for exit. Every day, every time. In the course and in the trading room. Key moment on S&P. Between this support and this resistance. Formations in the market are very, very powerful, very, very sharp, and very, very choppy. But because of volatility, very large formations. This end of minor trend to the upside remains an obstacle. What a pickle we're dealing with this morning. Shorts into support, not an option. If you're respecting this resistance as your key target, you're a very knowledgeable trader who is on constant defense this morning. As expected, it remains a problem. And that's what we've been dealing with this entire morning. End of minor trend as ultimate support since Asian session. End of minor trend as ultimate resistance this entire morning. Choose a tick, just like Apple, just like Tesla, just like Facebook. All the same formula. S&P finally reached this level, look at that. Remember, my bias remains firmly bullish. If this Fibonacci support respected, as S&P moving finally higher. And that's what we discussed with students. This is the very first trade this morning knowledgeable trader would touch. Remember, market finally rallying. What is the crucial moment right now? This decision point 2. This is exact same dance you witnessed on Euro. Do you remember this ultimate support on Euro monthly in 2016? Where Euro skyrocketed from? This famous 105? This is where Euro is now. Look at that. Price came not far off of reversal zone and collapsed to this Fibonacci support, where Euro been frozen at since January this year. Knowing what to do with your position on Euro, holding the key. This support is out, Euro in free fall. This support was respected on S&P this morning. Look at that. Good things in life worth waiting for. My beautiful alphys know that. As we discussed, this was the first trade that's finally skyrocketed through the end of the minor trend and flying to reversal zone like Euro had done on monthly. Support been respected. Shorts were not an option. How many points do you need per day? How many trades do you need per day? Not many. What you do need, however, is quality. And that's how you stay out of trouble, no matter what you trade. Rules are met, take a trade. And that's exact same thing played out on oil. If you missed the video in the event yesterday, to remind you, we were here yesterday morning. Well before the news, we discussed bias is bullish. We discussed, no matter what the news is, bias is bullish. What happened on oil this morning? Shock or not? Oil came to this resistance. Where's oil finding buyers this morning? Shock or not? This support. All the same exact formula. So, S&P is rallying. Knowledgeable trader knew and expected that. So, from your point of entry, S&P currently 7 points. What is 7 points on one lot size? $350. On 10 lots, $3,500. Students in the course have different account size, from few thousand to hedge fund managers who are managing 7-8 figure account. This is where S&P is heading to next. Remember that. Plenty of space to the upside. Knowing how to manage your position is a key. And that's what you learn in the course. All you have to do, play by the rules. Ultimate Fibonacci resistance. Ultimate reminder this morning. Only Fibonacci is natural predictive tool in the market. Shorting into support that's been respected since Asian session was never an option. This area been identified in front of you since Monday this week. So, this is where S&P is now on this little chart. Every single trade I convert to 1 minute so you can witness the accuracy of the method. Look at that. Support respected, just like S&P is doing currently on weekly. Except on weekly chart, it is ultimate correction. Sell-off came from this reversal zone and found buyers here. That's where buyers been coming from, traders. And that's identical accuracy in front of you right now. So, if you had enough of delayed indicators, if you know extremely well that indicators are wishful thinking, Fibonacci is the only natural predictive tool in the market, and you would like to learn with us in the course, I look forward to hearing from you. Learn the information under Learn. Group classes 8 weeks, private mentoring 16 includes all group classes. We start from scratch on Monday. Listen to graduates who trade various instruments, various time frames, various account size, from beginner to hedge fund trader in US and globally trading the method. What you will choose to trade, absolutely up to you. Never hesitate to contact me at 925-257-4298 or info@fibinstitute.com. As S&P reminding you, in front of you on 1 minute chart. 1 minute reached reversal zone, just like weekly, and staging only bearish pullback. Buying this late, such a dangerous idea for day trader. Exact same formula as market collapsed from on Tesla weekly last year. Tesla collapse did not start recently, it continued when Tesla broke through this support. So, we will review all of this next week. Trading room now closing. Knowledgeable trader adjusting his trail very carefully. We stayed through massive chop, we strayed through massive pain, we don't like wasting our time on nonsense. Shorts into support this morning were not an option. It was ultimate test of your knowledge, it was ultimate test of price action and Fibonacci once again. As S&P continue rallying, many points later. How many points you are in profit, how you scaling out of your position will determine how many lots you trade. And that remains the key. More lots you trade, more scaling out from position you can do. Here's another resistance in front of you. No surprise, every day, every time. That's the accuracy of the method in the trading room. Look at that. Not the place to buy, not the place to pull trigger randomly. This trail is out, S&P will collapse, just like it's done on weekly. And that's the reason our buys remained firmly bullish this morning, because this support present in front of you for days, been in a play on every single chart. Fibonacci is the only natural predictive tool in the market. Everything else, delayed artificial stuff. Why would you want to trade that? And that remains constant. And that's the reason my favorite fund in US, Renaissance Fund, which is widely considered to be one of the most successful funds in the world trading Fibonacci. So, you want to trade like hedge fund manager? You want to trade like a Renaissance fund master Fibonacci? And no, where ultimate Fibonacci support is, where ultimate Fibonacci reversal zone is, where our bias remained firmly bullish this week on S&P. Have a joy-filled afternoon. Look forward to seeing you on Monday. Quite a morning, traders. Quite a reminder. Only if you play by the rules, the sky's the limit. The only difference between all the instruments you saw in this video is risk management and trader psychology. Every single trade, different stop, different target. What appeals to you, only you can determine. Look forward to seeing you in the trading room and in the course on Monday. Thank you traders so much. Adios.